Look, you pay for an umbrella policy for one simple reason, right? Peace of mind. It's supposed to be your financial fortress, your ultimate backup plan. But what if there's a crack in that fortress? Today, we're going to pull back the curtain on a hidden detail in the fine print that could cost you tens of thousands of dollars, right when you need that protection the most.
We all think of an umbrella policy as that ultimate safety net. It's for those catastrophic million-dollar lawsuits that we all hope never happen. But here's the thing. Is it really the all-encompassing shield we believe it is? Let's dig in. Okay, first things first, a super quick refresher on what an umbrella policy, sometimes called catastrophe insurance, actually does. It's designed to kick in only after the liability limits on your main policies, your home or auto insurance, are totally maxed out. In short, it's for the really big stuff.
Yep, think of it as your final line of defense. It's a massive financial shield that protects your assets, your savings, and your future from a lawsuit that could absolutely wipe you out if you're the one at fault.
Okay, so that brings us to a really common and kind of scary scenario. Imagine you're in a bad accident. It was caused by another driver who only has the bare minimum insurance the state requires. Your medical bills are piling up. Your umbrella policy, it's just going to swoop in and cover that massive shortfall, right? Well, here's the twist, and it's a big one. Buried deep in that policy language, you'll almost always find this critical exclusion. It says that coverage for accidents caused by uninsured or underinsured motorists, let's just call it UM/UIM, is typically excluded from a standard umbrella policy. To get that protection, you have to add it back in with something called an endorsement, which is basically a special add-on you have to ask for. And listen, this isn't just some legal jargon we're talking about. This little exclusion has very real and very expensive consequences. Let's walk through an example to see exactly what this can cost you out of pocket.
So let's meet Zoe. She's just been in a pretty nasty car wreck. Now, the other driver, a guy named Bob, was at fault. But, and this is the bad part for Zoe, Bob is underinsured. That means his policy limits are way too low to cover the real cost of the damage he caused.
After the dust settles, Zoe's medical bills total a staggering $65,000. Now that's a huge amount of money. It's not $1 million catastrophe maybe, but it's exactly the kind of unexpected, life-altering cost where you'd expect your own insurance to have your back.
Now, remember Bob, the guy who caused the whole mess? His auto policy has a bodily injury limit of just $25,000. That's it. That's the absolute maximum his insurance company will pay for Zoe's injuries. And it's a shockingly common and low state minimum.
So let's do the simple and kind of painful math here. $65,000 in damages minus Bob's $25,000 payout, that leaves a massive uncovered gap. Zoe is now staring at a $40,000 bill.
So, how does that $40,000 gap get paid? Let's look at two possibilities. And I want you to pay close attention to that umbrella payout column. Notice anything? Yeah, it's zero in both cases. In scenario 1, Zoe has only $30,000 of underinsured motorist coverage on her own auto policy. So Bob's insurance pays its $25,000, her policy adds its $30,000, and she is still left with a $10,000 bill. Now look at scenario 2. Here, she has a much healthier $100,000 UIM limit. In this case, her auto policy pays the full $40,000 gap. In both situations, the expensive umbrella policy did nothing. Zip. So this is the absolute key right here. The hero of this story isn't the big fancy umbrella policy. It's the often overlooked underinsured motorist coverage on your regular auto policy. That's what actually steps in to protect you from drivers like Bob.
And this is where things get really, really dangerous. This piece of legal speak basically says this. If your umbrella company requires you to carry, say, $250,000 of UIM coverage on your auto policy, but you decided to lower it to $30,000 to save a few bucks, well, the umbrella company can just wash their hands of it. They won't cover that gap you created. You become personally responsible for it.
Which brings us to the key takeaway. So many people make this mistake. They think, hey, I've got this $1 million umbrella, I can totally lower the limits on my auto insurance to save a little cash. That is absolutely the wrong way to think about it. The safe strategy, the smart strategy, is to maintain strong UIM limits on your auto policy. That, at the very least, meet the minimums required by your umbrella provider.
So what do you do about this? How do you fix it? It's actually a pretty simple three-step process. First, pull out your policy documents. You're looking for the UIM section in your auto policy and the exclusions page in your umbrella. Second, confirm that your auto policy limits are high enough to meet the requirements of your umbrella.
And third, and this is the important part, call your agent and ask them about adding that specific UM/UIM endorsement right onto your umbrella policy. You'd be surprised how affordable it often is.
An umbrella policy is a fantastic, crucial tool for your financial security, but it only works if it's structured correctly with your other insurance. Otherwise, that shield you're relying on might just have a massive hole in it when you need it most. So the question you need to ask yourself is this: is your financial shield, the one you bought for that priceless peace of mind, truly complete?